Hello everybody and welcome back to another lecture. Inside of this lecture I'm going to be covering an awful amount of content and not just the model. I'm going to be covering fair value, the importance of opening prices, SMT, turtle soup and more, okay? So even if you're not interested inside of the Terminator model, you are guaranteed to get value out of this video, so make sure you stick to the very end. So first of all, let's just talk about turtle soup and the importance of turtle soup inside of the Terminator model. So basically, turtle soup is the backbone for every single one of my trades, okay? And it's just like SMT, where turtle soup indicates the end of manipulation, and when you pair it up with time and SMT, it is literally the strongest tool in your toolbox. Because, again, just like SMT, I do not trade without any turtle soup, okay? So if you're not utilizing turtle soup now, believe me, after this lecture, you definitely will be. Next of all, we're going to be talking about how I'm going to be utilizing time inside of the Terminator model, okay? So basically, the main ways that we are going to be viewing time with the Terminator model is we are going to be looking at it through the lens of opening prices, volatility injections, which is usually news, 9:30, and very specific times within the market, and also macros, okay? Now, what you need to understand is that the opening price will act as a timed reference point for us to take a trade off, okay? I'll go deeper on what a timed reference point is later on in the video. So now this is where we begin talking about fair value. Now, every opening price has to get offered fair value, okay? So if fair value is not offered to the opening price will come back to the opening price at the same time that it was due to offer fair value, but during another session, day, or week. Now, most of you don't understand the meaning behind fair value. Now, what this lecture is going to break down for you is it will actually give a meaning behind fair value gaps, and also give you a much deeper understanding of opening prices and how opening prices are actually utilized. So I'm going to be utilizing a car dealership as a metaphor for you to better understand fair value, okay? So let's say you and your friend walk into a dealership at 3 a.m. in the morning, and the price of the car is $21,000 because that's the price that they set at midnight. Your friend buys the car straight away, but you forget your wallet, so you go home, come back at 9 o'clock. You look at the price, and now the contract says that you have to pay $21,500. They've added on an extra $500, okay? So now the price is not fair because your friend got the same car for a lower price on the same day, okay? So now you've got two options. Option one, you now demand the price to be lower so the price is fair. Because again, your friend got it at a lower price. However, the dealer is saying that you need to buy it at a higher price, meaning that the price is not fair. So inside of the first option, the dealer now reprices your car to be $21,000 again at that 9 o'clock hour. Alright? Now this is our second option. You now demand the price to be lower so the price is fair. However, the dealer says he cannot reprice the car until 9 o'clock the next day because he is repricing the car higher today for another customer. So that is basically one big metaphor of how to use the midnight opening price, okay? Because this also gives a meaning behind why you buy below the open and why you sell above the open, okay? I'm going to break this down inside of a real chart now. So let's first of all start right to the left side of our chart right here. This blue line here is our midnight opening price, okay? Now I've drew out 2 to 5 o'clock, okay? Now see how this never gets offered fair value. Why? Because we've never repriced inside of this time window back to our opening price. Now, I've drew out 9 to 12. Now notice how within this time window, price also didn't get offered fair value, okay? So now look at what happens the next day. Midnight opening price here, 2 o'clock opens here, 3, 4, 4 o'clock, guess what? Reprices at the correct time back to our opening price to offer fair value within this session. Now look, 9 o'clock opens up here, okay? Now see, again, within this time window, our 9 to 12 time window, the previous day never got offered fair value. So look what happens. The next day, which is Wednesday, offers that fair value to this opening price. However, look, we fail to offer fair value to the current day's midnight opening price. So look what happens again, okay? The next day opens up. Now watch. We offer fair value to London, and now 9 a.m. opens up here. And we reprice higher. Why are we repricing higher? We are repricing higher because we need to offer fair value to yesterday's midnight opening price. Now again, look what happens. 9 a.m. fails to get offered fair value for the current day. So look at when we reprice higher into Thursday's midnight opening price. Watch. Friday, this is our 9 o'clock candle. This is the candle we're going to be monitoring, 212. During this AM session, look at where we reprice into. We reprice into yesterday's opening price. Now, I hope you guys are starting to see the importance of fair value here. Now, this is starting to give you a whole new understanding of why we buy below the open and sell above the open. Because every single session needs to get offered fair value back down to the same exact price level. What is this price level? The midnight opening price, okay? If a session is not offered fair value back to the midnight opening price, then guess what? We are going to get there either on another week or another day, okay? Within that same time window, that same exact session. Now, the market is offering fair value inside of every single candle because, again, this is within a daily candle, okay? Now, you can view every single session as a candle in itself. So guess what you can do? You can drop down to the hourly chart, fractalize it to the hourly, so every single one of these midnight to midnight openings is an hourly opening, okay? I'm going to let you figure out how to offer fair value to an hourly opening. But I hope that gives you an understanding of why we buy below the opening and we sell above the opening. Because 78% of the time, that midnight opening price is going to get reached within that session. Now, moving back onto our hourly opens. The hourly open is going to remain as our reference point for every single trade that we take with our Terminator model, okay? We will use the same logic as we did with our midnight opening price. Buy below the open, we sell above the open. Now we're going to start talking about turtle soups. Now, as I mentioned at the very start of this video, turtle soups are the backbone of every single trade I take. If there is no turtle soup, I do not enter. You'll not be seeing me enter a trade without a turtle soup. Now, the turtle soup is what's going to ignite the trade idea and is what's going to enter us into the trade. On the higher time frame, we are going to wait for a turtle soup, and we are also going to wait for the candle to close back in within the range. Because remember, we are only waiting for the high probability setups. We do not care about entering right at the SMR, okay? That does not interest me at all. We don't care about making a cool clip for YouTube. We don't care about making a video for Twitter. We are going to take the high probability setup because that is where the money is made, guys, okay? It's not made within the SMR. It's not made at the very low 20-yard trades they can catch once in a month, okay? It is not within those trades. The way you make money in trading is you need to stay consistent with one model, maybe even two models if you're advanced enough, but I highly recommend just sticking with one model and just consistently make profits. If you try going for 10, 20-yard trades, catching the very low, catching the very SMR, you will not make money in trading, and I can guarantee it. Now, moving on. After we get that close back into the range, we are going to move down into our lower time frame. Now, we are only going to be utilizing turtle soup on the lower time frames below the opening price if we are bullish, and above the opening price if we are bearish. Meaning that if our high time frame turtle soup was on the highs, okay? If a high time frame turtle soup was on the highs, then again on the lower time frames, we'd be looking for another turtle soup to happen on the highs. If our turtle soup happened on the lows, we'd be looking for another turtle soup to happen on the low time frames on the lows. Now mix this with double confirmation SMT, which if you don't know what that is, I highly recommend watching that SMT lecture I dropped on that because that is absolutely crazy and it can skyrocket your win rate. And if you start utilizing that with what I've already told you, I haven't even broken down the model for you yet. If you just start utilizing that with turtle soup, your win rate is ready through the roof. Now, the last kind of concept we'll be utilizing with this Terminator model is, of course, SMT. I always ramble on about SMT. So we'll be utilizing two lower time frame SMTs, okay? Because this is our base model. I'll be talking about more additives you can add to the model later on. So the first SMT is with the previous hour, okay? Meaning that after a high time frame turtle soup candle is closed, we are going to be watching SMT to form with that current candle that just opened up and with that turtle soup candle that just closed. On the lower time frames, that is. The second SMT is going to be within the same hour of our higher time frame candle, okay? And it's going to be utilized as an entry SMT. And not only as an entry SMT, but it's also going to be confirming our previous SMT, okay? So this second SMT confirms our first SMT, which also means that we can just straight away enter on the close of this candle. If we want to up our win rate by 8%, then we can also add a higher time frame SMT. I'm going to be breaking down the numbers in just 2 slides here. So then, let's actually break down what the Terminator model really is. So first of all, we'll wait for an hourly or 90-minute turtle soup. Now remember, it's not only refined to these 2 time frames. Time is fractal. You can do this on the daily chart, weekly chart, 15-minute chart. It does not matter. Now, ideally of a previous session or an hourly / 90-minute swing that got made on a previous day. I'll show you some examples of this so it actually makes sense to you. Second of all, we wait for the turtle soup candle to close back into the range, what I just talked about earlier. Then we drop down into our lower time frames, which is going to be our 1 minute for this trade. Now, next thing we look for is, if we are bullish, we wait for price to drop below the opening price. Okay, remember, because we are only buying below our hourly opening price. And then sweep a low that got created during the previous hour. The previous hour being that turtle soup candle. Then we check for that SMT from the low that got souped, then one more SMT to confirm the SMR and the entry. Now, last but not least, the stop loss gets placed below that lower time frame turtle soup low, and we just focus a 2R. Now, the reason why we focus a 2R will become very clear in our next few slides. Now, these are just going to be some bonus points to kind of up your win rate with this model. First of all, if you want to add 8% win rate, then you just utilize simply a high time from SMT. If you see a high time from SMT, bang, your win rate has gone up by 8%. Okay? Next, if it's a previous session or previous daily hourly swing, then that adds a 3% win rate. And if it's an SMR within macro, that adds a 5% win rate. Now, all 3 add up with the base model, add up to an 82% win rate. Now, there is a way you can make this an 89% win rate model. However, I'm not going to be breaking that down. I have already kind of shared the secret of how to make this a close to 90% win rate model. You just need to kind of connect the dots, and it's all on my YouTube. However, there is more inside my course which you can get a free trial on. You can unlock all of those lectures of how to actually combine this model with another model to make it a close to 90% win rate model. So that can all be free for you. So now we're just going to kind of break down the numbers and why we only focus on 2R, because a lot of people want to be catching that whole move, the whole right side of a market maker model, the whole leg. But I'll be breaking down why we're not going to be doing that. So this is why we target a 2R instead of a full range or 50% of the range, okay? So this model usually shows up high probability 3 trades a week, okay? Which is 12 trades a month with a 72% win rate. So this is a base model, no extra high time frame SMTs, macros, none of that, okay? Just a very base model which I broke down for you. So this is going to be around 9 wins, 3 losses. With 2R, the wins are going to yield you 18%, and the losses are going to yield you minus 3%. 18 take away 3, which is 15% a month. So now tell me, if you had a 100k funded account and you made 15% in 1 month, I'll let you do the maths, but if you want me to make it simple for you, that's 15 grand in 1 month, okay? To me, that sounds like a pretty damn good number, okay? You cannot tell me you would not be happy with 15% a month. Now, with this higher win rate, this usually yields you around 2 trades a week, which averages down around 9 trades a month, okay? So this has an 82% win rate with 7 to 8 wins within the month and then 1 to 2 losses within the month. The wins will yield you 14 to 16%. The losses will yield you -1 to around -2% for the month. Now, let's just take away 18 minus 3, and then kind of the average yield you'll be getting on the month is 12 to 15%. Again, do the maths. believe me, you're going to be happy with the 12 to 15% as long as you have the discipline not to take a trade every single day. So then, I haven't even got into some real chart examples. So what do you say we get into the charts and I'll show you some proper examples of this model playing out. Okay, so then this is our first chart example. So what you'll be able to see is that we have formed a low, we've swept it, we've not only swept this low, we have also got another low over here, which we have swept also, okay? Now, this right here already gives us our frame for the setup. Now, although this is not necessary, we are also beneath our minute opening price, which gives us our perfect frame to see buys. But however, that part is not necessary. However, it does up our win rate, okay? Now that our setup is kind of framed on an hourly chart, we are now going to drop down into the minute chart to see a drop beneath our 4 o'clock open, turtle soup to form, and then 2 SMTs. So now let's play it forward. Now, the very first thing I'll be doing is drawing out that 4 o'clock open, or that new hourly candles open, okay? Because again, this is our very main part of the trade that we're going to be monitoring. Are we below this opening price? Yes? Okay. Then our trade can be valid. So then we're going to wait for that drop beneath our opening price. As we can see right here, we have finally got that drop beneath our opening price. Now, what you'll be able to see is that NQ never soups any lows. But let's take a look over at ES, okay? What you'll be able to see ES doing is it has souped these lows within our previous hour. Remember, this is inside of our turtle soup candle. We need to see a soup of a low that formed within our previous hour, which is, in this example, our 3 o'clock hour. So we have got this. Now again, we need to see SMT with those lows. What have we got right there? We have got SMT. Now what are we waiting for? Now we're waiting for a second SMT to happen. Usually a candle to candle, but it's not a massive deal. It just needs to happen within the same hour that we're currently trading in. So within this 4 o'clock hour. Once we see the second SMT start playing out, then on the close of that candle, we can enter into our trade. So let's play this forward one candle. Okay. Now what can you notice? What you'll be able to see is that this candle's low got taken out by this candle. Okay. So what do? We enter on the open of this candle and we place our stop below these candles low. Remember, this is our first SMT. This is our major swing point. This low should not get taken out. Now, where do we place our take profit? At a 2R. Because I don't even care about this move up here. This is our high probability move. I don't care about any of this, okay? These highs are all engineered. However, I'm happy with my 2R, and you need to learn to be happy with the 2R as well. So let's speed this trade up. And then there we are, okay? Take profit has been hit, 2R. Now, could we have targeted all of these highs up here, okay? Let's see if that would have played out, because I can definitely tell you now that would have already played out. Waiting. It's really taking its time here, and then there we are, okay? We could have extracted, technically, a 4.5R. Do I care? No, okay? Why? Because our model states we are only going to be targeting a 2R, because that 2R brings our win rate from 63% to 73%, which is honestly a big difference. Why? Because of your psychology. It will yield around the same, okay? But believe me, if you keep taking losses again and again and again, it is going to hurt your trading because of your mental, okay? Not because of the technical analysis. No, it's because of your psychology and how your brain functions. So now let's move on to our next example. Okay, so now this is our next example. Now what you'll be able to notice is that we have souped this high. What is important about this high? Well, notice this high was made at 11 o'clock, got souped at 2 o'clock. This is a completely different session. So now this is going to be a high of importance, okay? Now let's take a look over at our highly correlated asset. What do you notice? We have got SMT at this high right here. Now, as I mentioned before, this increases our win rate by 8%. Now this is a very high win rate model, okay? So now let's drop down into our minute chart. So as usual, we are going to mark out our open, just like that. And now what are we waiting for? We're going to wait for a turtle soup to happen on the lower time frames of our 2 o'clock candle. Because remember, the candle that's just opening up right now is 3 o'clock. We're going to wait for a turtle soup to happen of our 2 o'clock candle. So let's play it forward. No turtle soup inside of this leg. But now look at what happens, okay? This leg comes up. NQ does not do anything. ES, comes up and sweeps this high right here. Now, this is SMT right there, and also SMT within the same hour. 2 SMTs right there. Now what can you do? As soon as you see this, you enter on the open view of your candle. Your stop goes above here. What do you focus? Your 2R. Where's your 2R? Down there. And now we're just going to wait to see this play out. There you are. Bang. This right here is my absolute favorite model that I teach people because it is simple. Okay? Everybody overcomplicates strategies. Their strategies are too overcomplicated, have too many moving parts, and they are subjective and not objective. Subjective strategies basically mean if you look in a Discord and everybody is trading the same model, someone would have taken one trade and someone else would have taken a completely different trade. Okay? That is a subjective model. Everybody wants to be trading a objective model, which is everybody inside that Discord should have taken the same trade at the same time with the same stop loss with the same take profit. That is a true model. That meaning that everybody in that community is understanding of the model. Okay? Now this right here, I have laid out the steps to your take profit, stop loss, everything. Okay? So I'm going to be going over one more example. However, inside of this example, I will not be showing you the higher time frame because that is going to be up to you. It is going to be pretty simple to understand if you've watched my previous model videos, but what I'm about to show you is extremely high win rate, okay? So let's move on to it. Now, as I mentioned before, I am using a slightly different higher time frame structure to frame this trade. However, the lower time frame is still going to stay exactly the same. So, our 5 o'clock is the opening price that we are going to be monitoring. So let's draw that out here and also over here. Now, what you'll notice is that we come up and we drop down rapidly. Now, both assets take out this low. This is still a turtle soup, and we have our SMT still within that previous hour, okay? Look at this low. We still have an SMT here. This candle never had manipulation below it. This is still a form of SMT, everybody, okay? Now, where do we enter? Our entry is when we see our second SMT. Now, when does this appear? Our second SMT appears right here, okay? See this candle to candle? This right here triggers us into the trade. So then let's take this. Our stop loss goes below this low, and our take profit goes right here. That's our 2R, exactly at that high. Now notice, we got in here, go out there, within, how long is this? 4 minutes. Okay, you stayed in that trade for 4 minutes and you made 2R. You made 2% on your account if you're risking 1%. Now notice what's going to happen after this point. Notice how we came back down below here. This would have stopped us out 100%. Okay, now we carry on going higher. This is our minute opening price and we just kind of chop around. Imagine if you didn't focus just your 2R and you focused the full range, because inside of this trade, RTP would have been up here. Okay, if you focused that full range, this trade would have been a loss. Okay, this is why we only focus on 2R. Our 2R is our high probability trade. Always keep that in the back of your mind. Now, if you want to push this even further to a 92% win rate with consistent trades throughout the week, and I've also made an indicator for it, you can join my 12-week mentorship program where I don't only teach you this, I teach you how the algorithm truly books price, meaning no PD arrays, no liquidity. I'm talking the real price levels, the real engineered liquidity, how to time when swings are going to get formed, when drawn liquidity will get taken out, all of that. If you want to learn that, you can apply and see if you're a viable student to my 12-week mentorship program. If you're interested, the link is in the description. If you want to see me live trade, join the community, and also have a very in-depth course on stuff like TAPDA, another extremely high win rate model, and other very advanced concepts, I've also left a link to the time vault in the description below. Now I hope you all learned something new, and I'll catch you in the next one.